Most traders guess.
We know.
Reaction is for retail. Anticipation is for architects.
This is your crystal ball.
Okay, good morning everyone. Welcome to the very first live stream. This is Shirayu. Today's January 26th. I think in Toronto or anyone living in the States, it must be like 5 a.m. I'm actually recording from India, so it's like 4 p.m. over here. But you'll be seeing a lot of me now. I actually do streaming twice, so if you would want to watch me talk about the Indian market, because sometimes I may even talk about if there's some an update that I need to talk about, I may choose to talk over there, which of course I'll let you know. But I will be speaking there in Hindi, which is our native language. So just so you might want to use the translation. I think the YouTube have it like by default. So without further ado, let's get into, before I even start explaining what the format will be, what I want to do is give you my purpose, meaning why am I doing, what this model is, what are we doing, like before even we get into our, like a typical format. So I want to bring your attention to this chart. This should be your motivation, that why you want to listen to everything I will say for the rest of, I don't even know how long I will be streaming, not just today, but like my life, YouTube is something that I recently started like a month ago. Before this, I was doing it on YouTube. I was very much active on Discord. I was on the street everywhere, right? Whether or not, speaking at schools, colleges, or just anywhere in Toronto. So I was very much active. Like 2019 is when I professionally started trading. I do hold my background in studies was done here. So been studying for many slightly more than a decade, professionally involved since literally the repo crisis was the day when I first started. So that is in itself, it's quite a story. But what are we doing here? So the reason why I'm showing you this is not to like brag, but to set the standard, and this also explains what I will be sharing with you guys, which is the philosophy that what we're really trying to do is, so this is the chart on June 15th. Okay, first of all, we live in a world where anything can be copied, anything can be replicated. I mean, people can use my face, and I'm sure where am I going with this, the AI thing, right? In the world where people can copy everything, I see brokers literally giving you access to their backend where you can literally edit anything, like you can just flex anything, any sort of a PNL. We live in that world. Like, it is super hard to kind of trust. And this is why I believe, in order for me to be very super transparent, I want to do the YouTube thing. Two, I'm not here to tell you, look at my PNL, look at my this. What I'm trying to do is to give you access to a perspective. And the way I will prove it is by giving you something that is uneditable. And what do I mean by that? If you would go on TradingView, if you will click, or if you will share that any link, that timestamp, once it's hooked, nobody can edit. Like it's just there in the server, right? Because if you look at it, it's like nobody can delete a crypto, right? Nobody can replicate it. Nobody can mine more than 21 million, right? So I believe from my standpoint, I think TradingView links are the best barometer for to basically be fully transparent with these are not edited pictures or just some fugazi that I'm trying to sell you something, but genuinely you can literally go on my X profile, or maybe I'll just put it into the description. You can click on it, you can literally see the date, you can click on the link, you can verify whatever you want to do. The point being, this was first published on June 15th. This is literally today. Literally just before I hit the record button, I took the screenshot. So I'll put both the links so you guys know this is not a fluff. Now, without the next thing now, why I showed you this is most people, including professionals, Okay, it's not been very great dealing with this kind of perspective, because people are so used to driving following the foot, right? I think about before Google Maps was invented, people used to ask everyone, hey, I want to go there, what way should I take, right? But now, so we have Google Maps. I mean, we're not just Google Maps, we have automated cars. You can just literally like fall asleep and the car will literally take you anywhere you want, right? So as the world is moving ahead, why the hell are we not moving ahead in terms of how we look at the market? Whether you look at the earnings report or you simply just trade based off charts, even your algo is based on some sort of a price action data points. In our crystal ball's perspective, if you're following or using any sort of data points has to do with the charts, remember, I like to use this philosophy where, as you can see, imagine market is like a roadway, okay? And then imagine car is who moves the market, okay? Like think about the banks, think about the big hedge funds who have a lot of money, right? Like think about BlackRock. Everyone who uses in some shape or form any sort of a price action, their primary assumption is the first principle, or the first thing they will do is to literally look at the chart, okay? Now, if you're trying to follow a car based on its tire prints, remember, you will never be able to know what car is that. Is that a Rolls Royce? Is that a Honda? Is that a truck? That's number one. Number two, you'll never be able to know when they're going to move left or right until the move is already done. There's actually a very a quote, from Wolf of the Wall Street. It says, the moment you hear in the Wall Street Journal, it's already too late. It is absolutely on point. So what are the things? First of all, you will never be able to know what car is that, where that car is going. You will always end up basically speculating. And then the third, what if they detour? What if they suddenly just stop because maybe their mom is calling them, or maybe they get into an accident, maybe they rush into a traffic, they get, there's so many variables that can potentially change the direction of that bank, which is the car. How would you know? You will only know when the move is already happened. So now you know why in every country, doesn't matter, in India or any country, 9 out of 10 people lose money. I mean, obviously. So what are we doing? What we're doing is we build a system which we call the crystal ball or market GPS. It focuses on the GPS. It does not wait for market to do what it wants to, so we react. We're trying to go 2 steps ahead, not 1, 2. And this is why I showed you this first, so you know what I'm talking about, right? And this is not just like one, cherry picking. I can give you so many examples that for 1 hour, I'll be just showing you hours and hours of examples. I mean, I built this model on the US market first, right? So I literally have, when you will join the Discord, you'll be able to see conversation literally since COVID, right? So there's a lot. I mean, this is not a coincidence. This is not just cherry picking one, sort of, like an image. Because in this stream itself, just in a few minutes, I'll be showing you exactly the full 2025 performance of the model on SPX. So this is from June 15 till today. And I'll be showing you before that. I mean, just think about it 1 sec. The world has seen Trump and I don't even have the right word, but let's say, suddenly I'm just not, I don't know. Just think about Trump and its era. Let's just keep it that way, right? We've seen crazy volatility in the market, okay? People have flip and flop, but I'll show you how the model performed, how it saw literally everything, right? So now you know the philosophy, you know the framework. Now the problem really is, if people were driving following the footprints, and if I suddenly just show up, okay, and I'd be like, okay, this is not the right way, or maybe I can offer you much more effective way. Well, the egoistic people, which is the most people, they don't reply. They block me because they feel threatened that they're not aware of this, or maybe they're just not, smart enough to know this, because this is a very basic question. How the hell people are not questioning, like, why are they following footprints, right? So it's like playing a game where you cannot even control the game, and you're playing by their rules but in your own way. Meanwhile, you cannot even do anything. So it is just chaos. No wonder why 9 out of 10 people lose money, right? So what I want to present you with this framework is to guide you more like a co-pilot, offer you when the market is about to turn, when the market is about to do XYZ. Now, I'm not trying to say I can predict with guarantee 365 days. There are things, everything comes with pros and cons, right? Our job is to make sure that the cons can offset by the pros. And that's why we're doing the YouTube thing, right? It's not to like show off or sell you something. See, neither you are coming onto the stream, as like, just to like listen to me. Neither I'm doing some sort of a charity, okay? I believe in fairness, although I'm a very big fan of Jim Carson, and he argues there's no such thing as fairness, it's all a zero-sum game, which is true. But I believe I can keep what he's argue in other things, but when it comes to, I think, the market, because I have my whole life, okay, I could be working with the big bang, which I was. I chose not to be with them because of my work ethics, like the values that I bring. I cannot tell you something that I won't even buy myself. And I'm sure if you have worked in some sort of institution, you know, at the very beginning, your commissions, your pretty much, other than the base salary, is completely dependent on selling, and you only get to sell what they ask you to. And I was just not happy with the fact. So COVID came, and then this is where I'm at right now. So here's what I was talking about, that what we're really trying to do with the framework is to offer you a forward-looking mechanism, a framework. This is not a prediction. Do not get confused that I'm offering you prediction. The moment you will look at this framework as prediction, you will fail right away, because you will go with this perception: this model has said this, it needs to happen exactly what it said, and if it does not, it failed. And that is the very first thing I want to give it to you. Most people look at this model as if it's a predictor model. It is not offering you any signal. It is not predicting anything. What it's doing is it's a dynamic monetary monitor system. It's monitoring a particular entity that moves the market. And keep in mind, the model does not move the market. The model has no power whatsoever that it can influence that car to move or change its direction. The only thing it can do is just monitor. The moment the car will move, it has the power to see it. So we would have to readjust to what we were doing. Okay, so this is a dynamic framework that offers you forward-looking visuals, research, and a better way of understanding what is going on by cutting out all of the noise. And we'll be learning each day as you will be seeing me. So the core of this stream will be Nvidia. I'll be talking much more in just a few minutes, but in this description, you'll be seeing a Discord. So there's a free Discord, there's a paid Discord. So even if you want to, just hang out, see what the model is about, Nvidia is something I'll be showing everything the model has to offer. So that's the primary, like a case study, I like to say, because of the compliance reason you cannot, which it is not like I'm trying to being vague, but I do not buy or sell. Like I genuinely, I keep my live stream as like daily logs to build the trust, because this is something you cannot back test. This is a dynamic model. For example, if COVID was a situation, imagine if we had something like crystal ball to see like real events like COVID, how can you backtest COVID? Okay, you can backtest something like COVID. You cannot backtest COVID. We did not even know COVID was a thing before, right? So every day is a different day. I'm not the same person I was yesterday. And people like me, or of course, directly, indirectly, we are a part of the market. Doesn't matter if you trade or you don't. I could be buying things, for example, Google. You know, I'm paying for Gemini, I'm paying for so many Google things. Even though if I do not trade, I ended up being in the market. Why? Because I'm paying for the Google's earnings is going up, so the money comes into the market. So point being, with this model, what we're really trying to do is to go basically 2 steps ahead, but we don't want to get confused with what it's really offering versus what your perception is, which is, I am not here to sell you a program. I'm not here to sell you some sort of a signal. What I'm really trying to do is to teach you a framework that was well due. I don't even know how long, because even in the MBA it is being taught how to read charts and earnings and balance sheet, not this framework. So think of it like I'm on a revolution and I want to change the perspective. That's the goal. That's why I'm here. Alongside, of course, the model is extremely expensive. So of course, I don't feel I don't want to work. I don't want to come here as like, oh, I'm just here for just the free advice. No, absolutely not. There's no such thing as free advice. Of course, I'm here to make money. It takes money to make money, and clearly, the way I draw the line is, of course, I want to make money, but at the same time, I want to make in a way that it is also impactful for you. So even if you choose to come into the free Discord, there's a link, and NVDA is something I'll be sharing everything. If you want to test it out, SPX will be the secondary thing, which I will be sharing, but there could be a chance, or in majority of the chance, there's a lot of content that will not be shared due to it's a paid content. I'll be speaking about it in just a few minutes, what is free and what is paid. But NVIDIA is something I'll be sharing literally everything that the model has offer. And here's chart that should give you an idea. On the left, we have August 10th. Again, January 26th is literally just before hitting the record. I took the screenshot, and you can see that's your motivation to listen to the whole conversation. We were talking about the performance for the SPX. Okay, February 10th, just before the Trump took office. I think 21st January was he took the office, but we still did not know what was going to come in April, right? Before the market saw, right, almost a month before, we knew what was going to happen, and the results are literally in front of your eyes, and you can make your own conclusion. The link will be given in the description. Please, people ask me, show me your PNL. Now, here's the thing. PNL has nothing to do with the model. The model is not offering you any signal. It is me as Chirayu trying to, let me put it this way. BCFX, which is the holding company, owns the model who offers the data analytics. Everyone pays for it, including myself, right? It does not offer any sort of managing services or signals services. It is just data, and it's just giving you in a format that you understand, you can visualize. Now here I am as a Chirai giving you my opinion on how I am reading the data, but even then I'm not here to call out a trade, although I will discuss case studies, and this is why I like to treat my streams as case studies, because I'll be logging the way I think, the way the model let me use a better word, how I'm using the model, and I'm just logging through this, right? So before the world even knew what was going to happen on April 4th, the results are literally in front of your eye. There's a lot of content on X I've already posted many times. Now after that, there's 4 different models which will be coming, which we'll be talking about. So this is why you'll notice that February 10th was when I first created the chart. It got done on March 4th, hence why, so this is when before the Trump even announced the tariff, we knew what was going to happen. The chart is literally on the left, the results are on the right. And as the model progress, meaning the price action is meeting what the model forecasted, we update. You know, there's 4 different models, which I will talk about in just a minute. So each model offers a segment, like there's a trend. It could be for years long. Then the other model covers a snippet of it. So think of it like this. A long-term model would be like a monthly chart. Although it has nothing to do with the time, right? Meaning you never want to look these patterns as if it's trying to predict. First of all, it does not predict, number 1. Number 2, it is not suggesting you want to look at the x-axis and be like, oh, I see, it's showing that it will peak or bottom around March and it will peak in late February. No, that's not how you read. Okay, how to read, complete different conversation, which we'll be learning in upcoming streams. But for just so you know, this is the most common thing where people get really wrong. So just so you know, this is where people get really wrong. Next, as the price action is meeting what the model suggested, we move on to the next chart. So it was published March 25th, and as you know, April 4th is basically when we've had that crash, you know, which was almost SPX 20% down, Nasdaq 20, little more than 20, right? Then the recovery, right? Boom. Oh, the recovery is, there was a chart which I don't know why, but I'm pretty sure it is on X. I was in a rush to start the stream because I still have a lot of other things. So there is from April to June, there was a chart which has literally covered the reflexive bottom when the market turned, especially the one when it first announced, if you remember, when the Trump backed off from China that he's not going on a war with him, and then boom, in just a matter of an hour, we've had almost like a 10% rally on SPX. That was mind-boggling, right? But then this is from June 15 till now. I mean, the results are literally phenomenal. Just literally, this is literally surprisingly very good. Usually they're not good. Like you could say, even I was impressed looking at, wow, like how mind-boggling the results are. Usually they are not like this, but just so you know. So this is what the model has done just for this year, right? I can even go in 2024. I can even go further, let's say in different asset classes. So you will get tired of watching these back and forth before and after. This shit works, okay? This is not just cherry picking, literally this works. To get more of these before and after, you could also come into the free Discord. There's multiple examples across the world: Japan, Germany, Hong Kong, China, India, right? You can for your own satisfaction. Because I would like, when people ask me about the PNL thing, yeah, I think that's the point I was making. PNL has nothing to do with the model, you know, does or don't, or does or do. The PNL is solely based on how much capital I have, how good I am understanding the model, what is my execution style, how better I am holding my motions, how good I am at my entries, exits. It is all on me, and I'll be giving you examples. Why do I say that? Like, my PNL will not reflect what the model can do or it cannot. The model in itself, it's for its barometer, you would have to come every day and see yourself. Because even before and after, I don't know how many people believe enough or not. Because we live in a world where everything can be fake, which is right. Number 2, everyone comes with some sort of, you know, tricks, and so I get the sentiment, because I do struggle with like how people interact with this, like with this skepticism. So I acknowledge that, and I have nothing against. Sure, I'm not asking you to just believe it right away. That's why we're doing this stream, right? I mean, whatever I will be sharing on the stream, you'll be able to see it in real time if this is not good enough, right? So with that purpose, with this mindset, what we're really doing is, now so far you have seen what the model has done throughout the year. You've understood the purpose, you've understood what we're going to do on this stream, which is using Nvidia as a case study. So we'll be watching Nvidia from now onwards. So that will be your sort of a trial to see whether or not this is just me picking up cherry picking, or if I'm legit, let's say. right? And then SPX will be secondary because that's the the core, the bedrock of technically the world. So we'll be using as a secondary thing. There will be a lot of things that would not be revealed because it's a paid content. But Nvidia, yes, primary. So now you have understood the philosophy of all this, and hopefully you have trust, and especially if you are watching until now, I'm hoping you do. So let's move on to what is this service. Is it just a technical indicator that I'm going to offer? Is it some, I don't know. I mean, usually people usually ask me, is it like a technical indicator? Do I need to have a trading view account? Answer is no. This is not a technical indicator. This is not something we do on. The reason why the charts are even involved is because when people come into the Discord, right, that's the language they speak. They understand how to read charts. So I have to speak in their language. That's the reason I even go on the chart. Like, for example, chart is like the last thing I would want to see. My decisions are happening, or, I'm making decision based on behind the scenes before it even shows up on the chart. Like, why do I need to see a chart when I literally showed you whatever has happened till today? We saw the script, we've had the script, so the price is just a validation to what the model suggested back in June 15. So there's a lot the service has to offer. It is built, suddenly I was just gonna speak in my native language. The model is not an indicator. It is built upon, if I just speak just based off the US market, because for the Indian market, it's a complete different model. So just for the US market itself, there's 27 as per the last time when I updated the handbook or the white paper, it was 27 models. Now technically, I'm always upgrading new product. Like, one of the product I'll be revealing like literally just today. So that itself brings in 4 different models. So that 27 makes it 31 models now. So it's built upon 31 models. Okay, there's a lot of information integrating to one another, right? That's why it's a crystal ball where everything is just connected. Like, everything is literally connected, right? So our core services, of course, it used to be these patterns, but now people usually ask me like, okay, what are these patterns? Like, how do you do this? How do you do that? So I created a new model, which basically it's a 4-stack navigation system, which I'll be talking about. What essentially does it explains why it is seeing things, why it's seeing. It cuts the noise, meaning what people think truly is happening or believe. Because see, the thing is, if you watch CNBC, okay, every day people are watching moves happening up and down, and their job is to justify it. So your perception automatically becomes, oh, it's because of Japanese yen is happening, that's why market is down, up and down. That's a very lazy way of just assuming. You're justifying by your laziness that, oh, it must be, right? Because your mind is so attached to the price has moved, we have to talk about. We have to let our viewer know why it is happening, because we did not saw it happening. We knew, we were sort of prepared, but why exactly it happened today, right? So there's a lot the model has to offer. So the core now, I believe the visualization and the 4-stack system becomes our core. It's not just one of the 2 different things. So that will be our prime. But I if you are just a TikTok trader or some retail trader, I know the patterns is something you will like the most because it's fast money. It's less work, easy to understand, or more so it's a quick visualization. People just want to see, people want to buy, especially the daily crystal ball is where most people are active. So if you are one of those people, then of course you will like the daily crystal ball, which essentially offers you how the market will look from the open to the close. But in US, of course, it's open 23 hours a day. So it's a completely different thing, which I'll be teaching you in upcoming stream, not today. So that's our core, the service. And then underneath, there's a tons of research. I'll be sharing few of the research just today. So there is, you can read everything. I cannot go each of these things, but I just want to give you a broad breakdown what the service is. So the visualization, the pattern, then the 4-stack navigation system, which will help you in different time horizon. So basically explaining why the visuals are like that, and it will offer you a risk management, meaning if it did not happen, first of all, it is not predicting. But a lot of time people get confused, like, okay, then why did I lose, or why it is not happening as what we discussed. So it goes back to the framework. And it is on, you could say it is a trade-off, a legitimate trade-off, which we accept. As we talked about in the beginning, that I am not the one who's moving the market, neither the model. I do not have the power to move the market. I cannot influence the people who are doing it. Our job is to monitor what they're doing. So if in the morning they were driving on a highway because they want to go from, let's say, New York to LA, and if they choose to decide to take a detour, or if they get into an accident, or if they want to fill the gas, or they want to eat, they want to take pictures, whatever they want to do, they can do whatever they want to. Our job is to literally monitor what they're doing. So if they choose to stop, and if they do not move, and if you think why the price action is not at what the model suggested, yes, it will fail. Because you started with the mindset that it is predicting. It is not predicting. It is just monitoring what the banks are doing. So if the price action have not touched its target, it basically means the car is still on its way. And that's the gap we need to fill, because this is where a lot of time confusion happens. And but since it works, hopefully I will attract more patient people who will see this as an opportunity, and we'll figure out a way, because it works. What does not work is, do you have the capacity to learn something so ambiguous or so different that nobody talks about? So now you know the core service. Then the sub is the research, and then within the research there's many of the research, and then I disclose all of my position, why I'm doing this, or all of my positions are always hedged, meaning I place trades that are both up and down hedged. So like butterfly, like basically in the neutral option strategies. I also do spot in the US. So I disclose every position whenever I take in my personal account. I disclose there, just so you know. So this is what's up. There's a lot of things you can just read on your own. The only difference between the Indian and the US is US has a lot to offer. It is not just the SPX or it does offer multiple asset classes like crude, stocks, ETFs, bonds, indices, yes, gold, commodities, FX, crypto, world indices, Japan, Japan, Germany, Europe, Europe, Hong Kong, right? It basically have a lot to offer. So here is the free versus the paid. Again, you can have a look, take a screenshot. You can also find it in the Discord anyway. I won't be able to go through each one of them. So please, I'll just skip this because I want to skip to the framework. Remember, I just said I just released even for my Indian clients, like I introduced them just yesterday. So now it is very important to understand the framework, because it will help you to get out of this mindset that it is predicting something. It's a dynamic mechanism. It's a framework. Understand how things channel through. So before I get into this, I want to actually show you this chart. In our framework, in our belief, we don't believe that the price action is the root cause. We believe it is a last expression. It's a validation of the existing pressure that was building and it got released. Like, for example, it is the pressure where you have to focus, and either it will release or it will constraint. Okay, that's it, and the result will be seen in the price action. So we don't look at how much SPX has moved, SPY or SPXW is there's a relative this, relative that. We don't even approach anything like. We approach by looking at questioning why, then where it is going. Okay, we focus more on why it is doing what it's doing than, oh, what is the trade, where is it going, we're gonna go buy, we're gonna go sell. If when you will connect the dots, you will see things happening in front of you. It's like having a script, right? So there's a 4 system. First of all, it will take quite some time for you to understand the whole crystal ball mechanism. This part, this 4 structure, it is different when I say there are 4 different models. Those 4 models are in itself a different spectrum, meaning a part of the whole ecosystem. This is a part of an ecosystem, meaning this is a separate thing. Those 4 models are different thing. This 4 framework is a different thing. This is, you could say, out of 100% of the ecosystem, it covers 33%. Okay. The pattern itself, let's say it would be, I mean, I've never done a math, but let's say it would be holding like 40%. And then the remaining is a lot of small little things, right? But once you understand the framework, you have literally, you understand why the patterns are showing what they're showing, because sometimes it can be so contradictory, which of course I'll be talking in just a few minutes. And so this framework will help you, and with the patterns and this, boom, you're like 80%, you understand the model. So that's good enough. That's not even good, that's just amazing. Okay, so the very first thing you have to understand is the pressure. This is the root cause. Now the pressure is always building, okay? There's always a pressure in the market. Now, when I say pressure, it's not just a bad pressure. A pressure can also take you, for example, in my life, I've always done the best when I'm under a pressure, right? Now, what people can see it as a pressure can be a blissful thing for me. Okay, so the pressure is not always like down. A pressure can also explode to the upside. Okay, so it is the fuel, okay, why prices are doing. It is the driven by inflows or redemptions, right? People are buying and selling. There's multiple way of understanding pressure, but the point is, this is the factor you have to look at it, because we need to change the mindset of how we think how things are happening. Okay, so higher pressure is equals to bigger potential moves, because in when I will show you when I will show you the transmission, everything is being scored, right? Everything comes with a number, so a normal person can remember what we're doing and how these numbers up and down will help them navigate what the model is suggesting. Because again, of course, it took me years to build, and every day I'm just building, right? So it will take a lot of time for you to even get a hold on what it is, suggesting. So I try my best to, keep it actionable and cut to, like a tiny summary. So everything comes with a score basically here. So essentially, when you see a higher pressure, it does not mean it's a bad thing. It means market is preparing for a bigger potential move. Think of it like an implied volatility at 100 percentile a day before an earning, right? So it does not mean market needs to go down. It just means market is pricing a large move, right? So, and it is still a probability because market can just, do an overnight move and then just close a flat, which is the case most of the time on Nvidia, right? So that's the step number 1. Step number 2, the constraint. Now, constraint can either pause the pressure or it can force the pressure to go parabolic. This is I'm talking about April. They were pressure building. That's why the model were able to see in February what was gonna happen in April. Even for the model itself, when the market touched, I think on SPX 52, I was surprised that it went even down 400 points. Okay, so the constraint pushed the pressure to a point where even the model itself was surprised. So the constraint is either pausing you for the time being, or it is just making you go crazy. It's like having a Red Bull with caffeine or maybe beta alanine, right? So this is the type of structures in the market. It could be options positioning, it could be contradict flows, like Goldilocks, one thing is suggesting economy down, rate cuts are happening. Other could be like, no, we're fine, K-shape, boom, no rate cuts, So constraints are essentially, it could be a factor, it could be a belief, it could be a sentiment, it could be as high frequency as option position. So these are the constraints, right? But the goal is here, either it will push the pressure to go parabolic or it will just compress it for the time being. Then the next step is understanding the risk ownership. Who is holding the bag? It could be on a good side, it could be somebody who will lose, because the higher the number, okay, the crazier the hedging mechanism will, okay. As Jim Croissant always say, the life is not fair, but in this particular context, it is true. In order for you to make money, somebody needs to lose money, okay? There is somebody actively losing money. Our job is to get out from that losing position, right? So risk ownership is essentially who is holding that energy, who is going to really bring the energy, like when the pressure will release. Who will be the one who will be bringing understanding? It is like understanding when you are driving a car and when you're monitoring, you want to know, is it like a Honda or is it a truck, right? A truck can really go hours and hours, even certain days, because the driver can sleep inside a truck. With the trucking companies, when they travel from Toronto to Vancouver, right? It's a 2-day trip. They can non-stop go, but a car cannot facilitate such a long drive. Yes, it can, but the truck is not going with like 4 people. It is taking a ton shit of information or goods or services, right? So complete different animals. That's why understanding who is holding the bag is so important, because it can give you a much better understanding of where is it going. Now, the last part, fragility. Now, this is a confusing one. I even till today, I'm not very convinced if I found a right analogy, because this is a problem between the mindset or the sentiment, I'll say, okay? Meaning a rate cut a lot of people can argue or make a point for good, and rate no cut people can argue it is also a good thing. Economics itself, it does not give you the certainty, right? It just creates distributions, and then you kind of have to work around your way to find the right distribution. So you're basically playing with the probabilities, right? Now, the fragility it's a mismatch between the price and the truth. And this is where I spend the most time working, literally reading each and every content. And I can only explain, as I mentioned, I still have not found the right way of explaining this. I think you might have to just watch the framework and understand it like that, because essentially it's a difference between, or the spread between, what the market assumes is happening versus what's happening in reality. And this is where it's a funnel. I want to come back to this. On the very first, the top, which most people focus on, this is where the algo traders, so-called fundamental analysts who will be reading earnings and this and that, gamma specialist, technical trader, ICT traders, people who trade based off signals, who are on the very first, the pressure, right? They are high frequency discretionary people. And below that, there is, I'm talking from a standpoint that SPX, right? Below that, you have constraints. It could be a constraint from cross asset. Equities wants to drop, but lower yields are just synthetically keeping a lid that's offering constant liquidity, which offers SPX to just smoothly move further up until the constraint is gone. And then the fragility part, right? So it's an interconnection between the second and the third layer, which is, since it's a mindset, it's not something quantifiable. You can only observe by, sure, you can run a regression, but then it is not we're looking for a hard data or some factual thing that we can just pinpoint. It is still, in the end, it's a collective of thoughts that makes people believe this is what's happening, right? So The last one is the regime. Now, the regime is essentially, if I talk from a context of the US market, the regime is what the Jun percent said. We are in a populist regime where the millennials are complaining that it is extremely unaffordable to get a house, which is the main reason why I even came back to my own country, right? One of the main reasons. So the regime is, we're in a populist country. We're providing policies that has a lot of protectionism. There is a whole chaos happening on a geopolitical level. So all of this goes into this section. So this is why third and the fourth are quite complicated, because sometimes the geopolitics can be just a noise. So this is where I spend most of the time. The first two is not very hard. I mean, if you are a macro guy, you'll understand the first, like what makes it a tricky is the third and the fourth. So now you know what the framework is and how we understand things, because the regime is something does not change like this. Like you will not become from being a populist to something else. Like the next you know how the Michael Howe talks about the fourth turning, like it's not like you will go back to the first turning like quickly, right? It is something generational. It could be taking so much time. So regime is something, it's the you could think of it like this is like a 200-day weekly moving average. There's a structural buyer because of that regime. As long as the regime holds, everything above is all noise. It is just a matter of time when things will just work on its way and the price will move smoothly. So now you know the framework, what the framework is. Now let me actually show you how does it look on the charts. Okay. This is the product. What you're seeing is the first section, which is I call the sum. The very first section where it says the system transmission trace. Remember I said everything comes with a score. So for a newbie, which I just made the model, so everyone's a newbie, including myself. It is easier for people to like memorize and keep a track of, because since there's just so much information here that you might get overwhelmed with what am I looking at? Like, okay, what am I doing? That's very normal. Hence why you have to remember the 4 framework, the layers, and the score. That's it. In the beginning, at least for the time being. So as we were talking about the 4 frameworks, so let me just walk you through a framework. Now this gets updated every day. Now if we talk about the very first thing is what the pressure, what type of pressure is building. So every day this dashboard gets updated based upon where is the pressure building. Does market was introduced to a new pressure? What about the previous pressure from the last trading day? Was it more powerful or it got, let's say, weaker? So this is what the pressure, and this is the same principle that gets applied on each of the section. So here is a general summary on the factors that are happening. I should say not factors, but more so beliefs. This is, beliefs is something, for example, let's say, based on consensus, market is net long. Based on consensus, market expects this. Majority of banks think SPX will do. That's a feeling. It's a consensus. It's a sentiment. It's a part of a sentiment, right? So essentially, yesterday, meaning the Friday, we've had, first of all, the GDP number, right? Now people are, oh, because of GDP, market is moving. That's a belief, okay? GDP factor itself become a constraint, okay? It could be a pressure, okay? But technically GDP number is not the pressure. Growth is it's a pressure. And then constraint can be good or bad, can be the GDP number, okay? So essentially yesterday we've had, on Friday, the primary driver was the GDP growth, and today is the PCE. Meaning, if growth is coming strong, why would need the rate cuts? Okay, like people would interpret this, right? So now, then the dots will be like, okay, growth is higher. Trump wants to cut, but J. Powell does not want to cut, and then the GDP is going up. Plus PCE is quite sticky, yields up, real rates, term premium, and that pressures the market. This is how people would interpret it. Hence why you are seeing a regime transition on the belief side, which is the third model, okay, in our framework, pressure, constraint. Basically, I'm talking about where is that? The risk ownership and the fragility, right? So the next is the binding constraints. Now the binding constraint is something, since the word binding, meaning you cannot really see it, it's an perception. It is something that's happening behind the scenes. For example, there could be an argument for rates higher, good thing, rates down could also be a good thing. There's always an argument on both the sides, right? So that's why it's called the binding constraint. Same thing with a lot of geopolitical noise is mostly binding constraint, not a real constraint, meaning it can switch in a matter of a dime, right? And right now, the market regime, we are in a based on the day over day change, we were hoping or believing, oh, we're in an expansion mode, 4.3 GDP, let's go. And now we are in a repair and digestion period. I'll explain what it means. You've had a follow-up on Friday. Triple Q was just like consolidating on a higher level, and now it's down. Thursday market had institution selling, and today's more of dealer hedging. Narrative was the growth is king, but today's oh shit, rate higher. So the belief collapsed. So this is the difference between Thursday price action and to the Friday. Now, what are the things the risk is concentrated? Because we understood the pressure. Now we have to understand the constraint in terms of the risk and in terms of the things that will fuel an upside basically. So right now you have a risk of short covering, long covering I should say, meaning you've had long position can get liquid, can cover because of the shift in the narrative that GDP, oh shit, that means rates higher, oh my gosh, should I hold, right? So there's a shift in that, and that could potentially will translate into a, what did I say in the very beginning? The price is the last thing that validates our perception. We don't look at the price as if it's telling us. The way we look at it is there's a pressure building, and the pressure can build in a sense that people are long, risk ownership is long, there's a potential for long gets covered, price down. So you understand, step by step. We don't wait for market to do the step down and then we're like, oh yeah, market was long, so based off X, because you will most likely will get to a wrong perception. Whatever will be the dominating headline, you will end up believing this is why markets are moving today, which is the most laziest way of explaining something, right? On the good side, the liquidity, okay, so post OPEX, we have the gamma as some sort of, dealers are like short. Dealers are broadly are short, so they remain in an acceleration mode, meaning if it hits a certain strike price on a downside, they can, it breaks because they're short those options, and if it goes down, they would have to forcefully hedge by shorting more. Same goes for on the higher side. If market goes above at a certain strike, and if, because they're short there as well, so they would have to forcefully buy to offset the risk. So in simple words, Thursday was growth narrative, but today is the rate reality, which is higher rate. Mainly the risk is associated with dealers, meaning they are in a negative gamma environment. That means they are the one who can exaggerate the move. The second is systematic traders. They're very net long. So a liquidation can also trigger from them that will, push the market further down. So you understand there's a shift in the narrative. You understand who is going to drive the move. So it's just a matter of time when things will connect or find its path, and then the moves will happen, okay? And then you'll be like, oh, you see? So what to now watch is 10-year yield crossing 4.35, and the primary failure mode will be the inflation acceleration, meaning if this were to go like into a cascade move, so you can imagine a scenario where 10-year yield moving higher alongside inflation swaps are moving, and that would be disaster. So you have pressure going, it's at 65, which is still high, but from a day over day perspective, it actually reduced by I think certain point, and we can clearly see, it went up. What are the pressure points that are building? PCE, tariff policies, and the GDP growth. They both went up. So the pressure is quite high, right? Now the constraint, when they both go all together, it is not a good recipe, okay? You have and the constraint is not even like you can quantify. It's something like a binding constraint, meaning it's just a perception. So if constraint and pressure are going up altogether, it is the recipe for a large explosion. The model cannot time the move. Model can only see what is building. It's like, think about a pressure cooker. I can see the pressure is building. It's just a matter of to explode. So do not get surprised. And from where the move will be coming, most likely the CTA guys, the algos, the wall targeted, everyone has to do with the high frequency discretionary, right? And the dealers, of course, right? So the fragility is coming from the rate side, the perspective, and the stress that is associated with that, which is the interest payment on the debt if the rates are going up. Inflation remains sticky, meaning you cannot cut the short-term rates, meaning Trump goes nuts, right? So those are fragility that can create ripple effects. So this is what the general, stuff is based on, the observation from Thursday to Friday. Now, this is my favorite section, okay? What it does is it's debunk what people think is happening. On the left, that's the surface level consensus used from, through a regression using Twitter data and the majority of the financial news outlets and sound bites, comparing what the market is feeling. So people draw the conclusion based on it's a soft landing because GDP up. Fed cuts are still coming because people are arguing for something that this number will revise down, this and that. And there's a constant dip buyer. And that's what led for market to move up. So buy the dip. I'm not saying buy the dip. I'm saying what the consensus are thinking. Reality. Rates, standing line is like if the rate moves up, all of that will fail. Like all of the perception will fail. Inflation stickiness, that part is growing. Okay, it's growing to a point that everyone's is I'm signaling or talking about. That's why the rate of change, the stickiness belief is becoming higher. The Fed pivot room, meaning Fed really have with this data, they will be under high scrutiny on how to cut rates. Like how would you explain this to the Congress, or the majority of if we exclude the Trump from this equation, I think most federal governors would argue that they don't want to cut, or they want to at least stay where they are right now. So now the price is what people believe, but the structure is the thing that will reveal. So quickly, where the stress is building, how it is building, who's holding the bag, and the constraint, right? It's just a matter of time when things will explode. So there's a lot more content. I do not have enough time to go on each one of these things because I want to move to the two things. Number one of the reports, which is a weekly sort of a wrap up or a dashboard that breaks down what was happening in the US market. So I want to you can read all of this. This will be in the free Discord. What I want to bring you is, again, here is the weekly what people think was happening versus the reality check. In this week, we learned that low VIX means selling is controlled, meaning if VIX is going down, obviously people are in a buying the dip thing. It should be looked as it's a positive thing. But low IV during drawdowns hides stored volatility and dealers gamma effects, meaning a lot of time people come and they sell 0DT options that just synthetically lowers down the volatility on very short dated options. So people get blinded by where the risk is really building, because for the 0DT, everything will get reset in every 3 p.m. right? So this is the reality. Is the second one was is dealer support is holding the market up. Now if you look at the rate of change, their support is also declining, meaning they're not buying as much as they were before. Index fell less than 1%. Market is resilient, right? But mega caps are masking the broad pressure. Small cap rotation divergence signals weakening participation. Then the next one is the Fed liquidity, and I cannot go each one of those things. I'm sure you can just go, because I'm just like reading it anyway. The next thing I want to talk about is here's the bottom line. Fragility building beneath suppressed volatility and low IV. Moves delayed, not diluted. Crowded mega cap positioning, tight credit spreads, tariff tail risk, and dealer gamma flows create a negative feedback loop that absorption is struggling to contain. All of these things, tariff uncertainty, credit spreads, dealer gamma, like all of this becoming such a big thing that the absorption is not enough. For example, I know we did not cover this section, but clearly as you can see, the red bars are much larger to tackle the green one. So of course the selling pressure is just building enormously, and we already covered what to expect from a pressure standpoint. So just a matter of time. I'm warning you literally right now. So what are the things to really look for in this week? You have durable goods, consumer confidence, PCE, FOMC, and then of course the options data, and then of course the month-end EOD options will be the key focus for this week. So we'll be like staying tuned into that. Now I want to quickly jump into our next part of our the research, which is our daily intelligence report. This is a separate actionable report apart from the risk monitor thing, because we understood the risk. We know from a structure standpoint there is a risk building. We know the reasons, we know who's building and what they will potentially do. Now we have to turn it into an actionable checklist. When I run the model, SPX was at 69004. Right now it's like, I think it's a few points down. So at the money IVs pricing in 8.5%, which is like low. From a probability standpoint, based on the model, remember this is based on the Friday close figures. When the market will open, you will have access, the model will have access to the information, so things will change. So the paid members will get access to this updated information, the patterns and all. So if you're just relying just what you see here, just so you know, you will be staying behind until my next video. So as per the Friday's number, from a probability standpoint, the primary expectation is the market will remain in 68.50 and 69.80. That's like a range we're looking at. And the scenario B is a further escalation to the downside. So, there's a range, and then there's a higher chance it will go down. The model does not see a move above 7,000 or even above, right? So you have negative gamma, that means dealers net short, with WENA, the IV is being a headwind, and then the time itself is pulling the market down. So you have the perfect recipe of what we just explored in my risk monitor. Remember that the numbers were going up, so all of these are included there. So here are the main, you could think of it like there's a lot that goes into these levels. They are not anything to do with technicals or 200 DMA. We don't trade like that. As I mentioned, I do not go on the charts until I have to plot the pattern. That's it. So these are based on positioning. There's each metric goes, there's a lot of complex, like a funnel for each thing, like how it chooses. Of course, eventually I'll be sharing all of that, but the focus should be right up here. This is a gamma profile of SPX only, not SPY, just the SPX. And SPX both overnight and the main index basically. So you have gamma being negative, but the delta is positive, meaning at a certain, as you will see at certain places, you will see an acceleration volatile sort of a zone, meaning if it gets break, you could see an exaggeration sort of a move, and this will explain much better. For example, if you look at today's expiry, okay, if market choose to break below 6750, the dealers will aggressively sell due to the VANA component. Same for if market choose to go above 6980, you will see it's like a vacuum. We don't know where it will end, okay? Depends on how the positioning is building, but those becomes your sand in the line. And then anything in between is where the market will choose to just like move around. So here's another way of understanding what is happening, what the dealer risk matrix is. Again, there's so many like things that goes into this, but for now, just look at this way. Think of it like below the spot, which is the horizontal line, there's team A, and then above the spot, team B. You have to look at how many balloons are there and how big they are. The bigger and the more that part of the balance will hold. So right now what I'm seeing is pretty much the sellers are winning, because if you will count the amount of circles, the red has a little extra one, and honestly it is such a close call. This is more of a neutral to sideways type of a move, where a potential of maybe market will go up and then decline, or it will basically touch one of these green balloons and then it will come back and close flat. Like one of these two situations can happen, is what the current figure suggests. Of course, this will get updated eventually. So the strategy is either you respect these levels, or you wait. If you want to play out the breakout, then you would have to wait until the market breaks the levels that we discussed. From a nearest expiries, you have the support is, at least in the near term, you have at 6850, and then there is a slight little at 6885. A move below 6855 is going to be crazy. So of course the paid members will be able to know when it get updated, but I want to pause up here. I think it's an hour 20 minutes already. Just a few things I want to talk about. Number one, to continue to learn more about this, there's a free Discord where we'll be sharing. I know we did not talk about Nvidia. I'll be sharing a lot of content about Nvidia in the free Discord. The link is literally in the description, does not cost. And I also have the paid membership if you like the content that I'm talking about, because what you're seeing is just a snippet. It is just so much content, and this is not like a pitching or a marketing line, but I genuinely think if you are somebody who's very curious about understanding how the market moves and why it's happening, so you are always ahead of the curve, like genuinely, this is something you would want to know. And until you have the full trust, just get in Discord, see yourself. It won't cost you anything. So I will guys see you in the next video and in Discord. It was nice. You'll be hearing me a lot from me, and I'll try my best to bring in more and more content quick. So till then,